Yo, what is good, everybody? Let's talk options trading. One way to make a lot of money in the stock market. I look at options as kind of like penny stocks because it's high risk, high reward, but you're trading the bigger stocks like Nvidia, Tesla, Amazon, stocks that can actually make moves and has news to back it. Without further ado, get your pen and paper ready because this one's going to be action packed. Before we start, I want to say I'm not a financial advisor. I'm here to tell you guys what to buy, hold, or sell. I'm here to give you guys tips and tricks on what stocks to trade, give you guys daily news and stocks to watch. That's in other videos though. But options are contracts that let you buy or sell a stock at a set price by a certain date. Today we're focusing on basic call and put options. You'll hear terms like strike price, premium, and expiration date. The game plan: buy low, sell high, based on how the stock moves. So what are call options? So there's calls and puts. Let's break down call options first. A call gives you the right to buy a stock at a strike price before the option expires. You buy a call when you think the stock's going to climb past that strike price. You pay a premium, which is the option's cost. For example, if you buy a $50 strike call for a $2 premium and that stock hits 60 bucks, you're making money off that gap. So now put options. These give you the right to sell a stock at a strike price before expiration. You buy a put when you think the stock's going to drop below that strike price. Like calls, you pay a premium up front. Say you grab a $50 strike put for $2 and the stock falls to $40. You profit from that drop. So let's talk about price and premium. The strike price is a fixed price where you can buy or sell the stock. The premiums, what you pay for the option, and it depends on stuff like market hype, time left, and how wild the stock is moving. So think about supply and demand. Think about a stock into a stock basically. And later on in the video, I'm going to be showing you guys a stock that's relatively low priced, but the premiums are insane just because of the hype behind the stock when we get to the charts later on. For anyone that's trying to take their trading to the next level, made a website with a bunch of courses that you guys can check out. First link in the description below. Check it out if you guys want to up your knowledge on the stock market. Relatively cheap courses, and we have sales going on. So check them out while the sales is still happening. But options can be in the money, meaning they've got value, like a call when the stock's above the strike, or out of the money where they don't, like a call when the stock's below the strike. So let's talk about basic options. So here's how you trade these. First, you pick a stock and guess where the price is heading. Bullish, go for a call. Bearish, grab a put. Choose your strike price, and when the option expires, pay the premium to buy it. Then sell the option before it expires to cash in profits or cut your losses. Some people trade options differently. I personally trade options overnight, and I sometimes day trade them where I sell them same day, maybe even trade it like 30 minutes. Like today, for example, Tesla was making a big push to the upside. I bought a call option, was in that play for like 10 minutes, made like 50% back, and sold it. But in this example with these pictures, we have Nvidia, for example. We pick an option. The strike price is in the middle. I'm going to be showing you guys this on the chart as well, but strike price is in the middle. And let's say we pick that 390 to that 395. The ask is mainly the one that you're going to be buying. So if you're selling, this is what people are selling it at. This is what people want to buy it at, basically, in short. But then you buy it, and let's say the stock moves up maybe $1. That is what we call the delta. If you guys don't know what the delta is, every time your stock moves up $1, this is how much your contract goes up. So add 52 to 390 or 395, and then that's your overall price if the stock moves up $1. Delta is going to move as the stock moves value. So more away from the strike price, you're probably going to have a higher delta. So if you look at the more expensive ones, like this one's 660, the delta is around 0.71 compared to the one that's $390 or 395. The delta is 52. So it's going to be moving based on the contract and the hype behind the stock. So let's talk about risk and reward because it's a high risk, high reward game here. Let's keep it real. Options have big potential, but comes at risk. You could score high returns if your stock moves your way, but if it doesn't, you could lose a whole premium you paid. Options lose value as expiration gets closer, so timing is key. Manage your risk by setting a budget and not going all in. Do not risk your whole portfolio on options, please. I mean, day trading in general, swing trading in general, you're going to risk 10% of the 10%. Just only risk the money that you're willing to lose. It's basically with penny stocks, what I tell you guys with all the penny stock videos we make. So getting started with options. Ready to jump in? Open a brokerage account that lets you trade options. I recommend Robinhood. Very easy to use, especially if you're a mobile user. Links in the description below so you guys can earn some rewards. But do your homework on stocks and market trends. Start small to get the hang of it. Check out option chains to compare strike prices and premiums. And if you're nervous, try paper trading first and practice without real cash. With that being said, we're going to be on NVIDIA once again, and we're going to be using TradingView. You kind of can't buy options unless you link your trading account with this. But with that being said, we're just going to be looking at the options. I normally buy 2 to 3 weeks out just to make it more safer. Normally it hits later on, especially with this volatile market. With that being said, we're going to be looking at this one right here, 144 strike price. The strike price is right here in the middle. You got bid, ask, price, delta, gamma, and the other ones. The main ones that you really want to focus on is the deltas because, like I said before, every time the stock goes up a dollar, this is how much your contract is going to be worth. Another thing to focus on, of course, are the dates. Let's say if you're trading SPY, if we go over to the SPY, they have next day expiration. So if you mess up, you might get same day expiration. So for example, these ones are going to be worthless because it already expired. But let's say if it's the 24th right now and you guys are trading it the same day, the expiration chain is going to be insane with this. So the faster your contract expires, the faster your contract loses money. So the premium goes lower and lower, faster and faster. That's why when I'm trading stocks like Nvidia and stuff like that, I try to get 2 to 3 weeks out just so I'm not losing too much money if it doesn't go my direction. And I can hold it for a little bit longer without losing too much of the premium as well. But like I said before, I was going to show you guys a stock that kind of has premium. So if we look at Nvidia, Nvidia is currently priced at $144, high market cap, like over $3 trillion. And in the money play right now is around $295 to $250. So keep this in mind. Let's look at Circle. So right now, Circle's getting a bunch of hype right now. So fortunately, I forgot Circle doesn't have an option chain on TradingView, but I have it pulled up as a picture. And it's better because we can get it side by side. So basically, in the money plays right now is worth 23.70. So add this, so multiply this by 100. So basically, this will be worth $2,300. And then for the NVIDIA ones, this will be worth $195. So keep that in mind overall while trading as well. Don't think that you're buying a contract for $1.95. It's really $195. But if we look at the in the money plays, yes, it's worth $270, but at the same time, $2,300. So that's what we were talking about earlier with the hype Circle has right now. It is bringing the option chain and the premiums up a bunch because a lot of people are trading it. Just to show this a little bit more, I know Microsoft isn't close to that 270 mark, but it's worth $500 right now. We're not talking about market cap at all because Nvidia has a way higher market cap and they're worth like $100. But Microsoft, highest one in the money, is worth $500, $450 basically, and this one's worth $2,300 for the same week plays. So I just wanted to use that as an example to show you how much the premiums can go up if a stock is pumping. And yeah, basically that's in short. So if you guys are in any other hype stocks like this, keep that in mind overall because the premiums are going to be up a decent amount. With that being said, though, with hype stocks, you can make even more money, but you can lose even more money. Man, with that being said, hopefully I explained the basics to get you guys started with option plays. I have a course, first link in the description below. Go check it out if you guys want to know more in depth and actually know some option strategies. I'm going to start making videos on option strategies, explaining them more, actually using them in trading, and to really show you guys how to really do options with the strategies because you can make a decent amount of money off of that. But with that being said, man, comment down below if you guys have any questions. Feel free to ask. Thank you for watching the video. Smash the like button, subscribe if you guys are new, and I'll see you guys in the next video. Peace out. I'm also coming out with daily blogs to update you guys with the stock market before I even make these videos. So if you guys want early news, early stock plays, and things to watch, check out the site as well. This is completely free. Just go into the website, go into Creator's blog. You guys can check it out if you guys want.